Hello, I'm Kate Stichina and you're on InstaForex TV channel. Yesterday, oil quotes were trading within the same range, going below it for a short time once in a while. Meanwhile, the market sentiment improved as China and Mexico softened their stances towards a trade standoffs with the United States. The Mexican president assured that the two countries will find a compromise before June 10, when the New Year sanctions should kick in. China's Minister of Commerce expressed confidence in a productive dialogue between Beijing and Washington that will result in a mutually beneficial trade deal. Besides, oil prices are rising amid a shrinking supply. Venezuela's exports contracted as the U.S. refineries stopped purchasing the country's oil due to fear of sanctions. The cut in exports from Venezuela and Iran is one of the main factors supporting oil quotes, along with the OPEC Plus agreement to reduce production. On the other hand, the United States has been increasing its oil output since early 2019. Currently, it produces 12.3 million barrels per day. The situation with the country's oil reserves is similar. The latest data from the American Petroleum Institute reflected a rise of 3.5 million barrels in the U.S. oil stockpiles last week. However, the market did not show any major reaction to this news. Today, the Energy Information Administration will release its report, which is considered to be more accurate, and traders are expected to react to it. In case the growth of stocks is confirmed, oil quotes will be under pressure. Currently, the Brent benchmark is trading sideways in the range between $61 and $62 per barrel. The US dollar is still trading lower amid expectations of a monetary easing by the Federal Reserve. Meanwhile, the greenback has halted its decline because investors regained risk sentiment for the same reason. Traders grasped a lot of signals that the United States regulator is serious about changing its monetary policy. On Tuesday, Federal Reserve Bank of St. Louis President James Bullard indicated their prospects of a monetary easing. Fed's Chairman Jerome Powell said yesterday that the central bank would take all necessary measures to prop up the domestic economy. Such news gave a fresh impetus to the Russian ruble to assert strength. At present, falling oil prices are the only negative factor for the ruble in the short term. On Tuesday, the dollar-ruble pair approached the important support level of 65. The intraday resistance of 65.50 was able to stand the pressure in the recent days. So, that level will hardly be broken in the near future. Today, the pair is expected to trade at the level slightly above support of 65.00. Today, Russia's finance ministry is due to announce a volume of funds to be allocated for forex interventions, which will be held from June 7 until July 4th. Besides, today the ministry is running two auctions aiming to sell federal loan bonds with a maturity of 5 and 6 years. Back to Forex, trading sentiment will depend on several events, such as a policy meeting of the ECB and a press conference to follow. On Friday, the economic calendar contains a report of crucial importance, U.S. non-farm payrolls for May. Keep track of the latest developments in financial markets. Stay tuned.